Hello, America. Stan, the Annuity Man. I'm America's annuity agent, licensed in all 50 states, including the one that you're sitting in that I'm assuming is very beautiful and picturesque. Nod your head, of course. All right, producer, what do you think of the shirt? I found this humorous. Get it? Get it? Do you get it? It's a bone. It's humorous bone. Got it? Hey, enough about that. It's that simple. The simplicity of the shirt is what we're going to be talking about today. The simplicity of multi-year guarantee annuities and how they work. And oh, by the way, multi-year guarantee annuities are the industry's version of a CD, a certificate of deposit. So if you hate all annuities, then I guess you hate all CDs, which is probably not the case. So with that, I'll be back in 2 seconds. I got my trusty pen. I'm going to sprint, crawl, climb to the whiteboard, and we're going to break this thing down after this. All right, since multi-year guarantee annuities are the industry version of a CD, certificate of deposit. By the way, great story. My mom, 81 years old, St. Augustine, Florida, and I don't like doing business with family because then when you go to the family gatherings, all they talk about is business. So people are like, well, don't you sell your mom MYGAs because she's a CD buyer? No, because I don't want my mom saying, hey, can you help me explain this? It's a CD, Mom. It's a guaranteed interest rate. Love my mom, 81 years old. She goes to the Bad Chicken Dinner seminars and eats all the agent's food. I really appreciate that. But should she buy MYGAs? If she wasn't my mom, I'd sell her a MYGA. But she's my mom. You don't sell your mom anything. You know better than that. All right, let's talk about MYGAs and CDs. You know, hey, producer, can I go from that side and right? Because see, I'm not left-handed. What do you think? Nod your head. No, you said no, and now you're saying, okay, here we go. As they say, I was going to say, I'm not amphibious. It's ambidextrous, but I was going to try to, okay. I'm not amphibious. MYGA, principal protection. I'm just going to put PP. CD, principal protection. What does that mean? You're not going to lose any money. That's a good thing. Number two, what's the difference? What's the same? So this is the same, this is the same. Duration, you can choose your duration. I'm not going to put CD because that makes no sense. So you can choose your duration. What does that mean, Stan, in English? That means if you want a 1-year CD, you can choose it. If you want a 3-year MYGA, you can choose it. Oh, by the way, the differences between these two is that typically the shortest term, ST, is 2 years that you can buy. With a CD, shoot, I'm assuming you can do 3 months, 6 months, whatever. I mean, you can really do some short-term stuff over here, which is great. I love CDs. I don't sell them, but I love them because they protect your principal, and in this time, that's a good thing. So do multi-year guarantee annuities. Did you hear the word thing, producer? I said thing. That's that North Carolina thing coming out. Okay, so those principal protection, principal protection. Choose your duration, choose your duration. 2 years is the shortest. You can go to as short as 3 and 6 months. Now, what's the difference between the two? Those are kind of the same. Oh, by the way, no fees. Are there commissions in both? Yes, there are commissions in both. There's no philanthropist out here. I'm getting paid if I sell you one. The banker's getting paid if they sell you a CD. And that's okay. It's built in and hidden from the client. I'm not sure that's okay, but that's just the way it is, meaning that if you put $100,000 in a MYGA, you see $100,000 on your statement, but I did get paid a little bit from the company one time. You don't ever see it. Same thing with CD. Put $100,000 in, you see $100,000 go to work. Did the advisor or banker or broker get paid? Yes, they did. So no fees. There are commissions on both, but in essence, they're pretty much the same product. So what's the difference? In 2 seconds after I clean this board, I'm going to show you. Alrighty then, as Jim Carrey says in the movie, let's look at CDs and MYGAs in different types of accounts and how they perform. First of all, the guarantees are the same. The interest rate guarantees are the same in every single account, right? So in an IRA, you put a CD in an IRA, you put a multi-year guarantee annuity in an IRA, the interest grows tax deferred on both. In a Roth, you can put it in a Roth, you can pull out the money anytime, you can take it out tax-free. But here's the difference. Here's where the rubber meets the road, Miss Producer. With a CD and a non-IRA, you have to pay taxes on the interest, taxes, 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 annually. with a multi-year guarantee annuity and a non-IRA deferred. Does it mean it's better than a CD? No, it doesn't mean it's better. But there's a lot of people that want guaranteed fixed returns annually, but they don't want to pay taxes on the interest. Now, are you going to have to pay taxes when you pull it out? Yes, you are, but you can defer them. You can push that tax puck down the ice, hockey analogy. Now, I'm going to clean this board, and then I'm going to tell you some laddering strategies that you can work with both CDs and MYGAs. All right, so multi-year guarantee annuity CDs are kind of the same thing. There's just some issues from the standpoint of which account you use in it. Issues meaning taxation. Remember, in a non-IRA setting, with CDs, you have to pay taxes on the interest annually, and with multi-year guarantee annuities, those taxes are deferred. Doesn't make it better, just that's the difference. Now, let's look at some laddering strategies. The way that I look at, I don't sell CDs, but I love them. You can go to, I think the best source for CD rates is bankrate.com. I do not get paid by Bankrate. I don't know anybody there. They should send me a gift for that. But if someone says, Stan, what's the best CD rates? That's where I pull, bankrate.com. Where's the best MYGA rates? Yeah, you guessed it, theannuityman.com. But if someone said, hey, I want to ladder maturities, which, people sometimes ladder bonds, and I even ladder income with annuities, but that's a whole nother story. But let's say, hey, let's maximize interest rates with a ladder. How would you do that on a 5-year? So let's just say someone said, okay, I've got $500,000, and forget the account type, because the account type, whatever the account is, we've already talked about the non-qualified and the IRA and the Roth IRA, but it's $500,000. What I would tell them to do is, okay, let's put $100,000 in each tranche, for lack of a better phrase. You have a 1-year, a 2-year, a 3-year, a 4-year, a 5-year duration. Okay? So in the 1 year, you put 100, 2-year, you put 100, etc. So you're splitting up the 500 over this duration time period. Now, to maximize interest rate, historically, this is what you would do. You'd buy a $100,000 CD, a $100,000 CD on the 2-year, and then the next 3 tranches would be MYGAs, historically. Would you shop all rates to see the best, who has the best rates in these tranches? Yeah, but historically, CDs win in that short-term duration. And you could even do the ladder differently. You could say, I want a 6-month and a 12-month, and you could do it any way you want, but you're buying the highest yield, and this is typically how that ladder would look from a just maximizing duration and maximizing yield. This would be a great fixed rate ladder for a portfolio. All right, let's talk about claims paying ability, because that's important. It's important to my mom. She loves FDIC insurance. She doesn't know what it is, but she loves it because she feels warm and fuzzy, and that's all that matters, right? So CDs are backed by FDIC, Federal Deposit Insurance Corporation. And people, the tinfoil hat people out there say, but Stan, the government's in debt and blah, 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 and da-da-da. Trust me, that's the best coverage on the planet. Now, how are multi-year guarantee annuities covered? By the state guarantee fund. And each state has a guarantee fund. I'm going to give you the address of where to go to find it, because each state is different, of course. There it is, www.nolhga.com, nolhga.com. And there you can pull up your specific state of residence. There'll be some frequently asked questions. They list them as FAQs. And then you can pull up what the coverage is for your specific state. And it's per policy, per owner, per company, but that's the way to look at it. And typically you'll see anywhere from $100,000 coverage up to $250,000 or $300,000 coverage for multi-year guarantee annuities. But in my perfect world of unicorns chasing the butterflies, annuity unicorns chasing annuity butterflies, always buy your multi-year guarantee annuity based primarily on the claims paying ability of the issuing carrier, not this state guarantee fund. In fact, the industry frowns upon very severely. They do not like agents saying, buy this multi-year guarantee annuity because there's a state guarantee fund, okay? And they certainly don't want the agent saying, buy the multi-year guarantee annuity because the state guarantee fund's like FDIC. It's not. It's not. FDIC is better. Doesn't mean CDs are better, but is better coverage, in my opinion. All right, I've done another multi-year guarantee annuity video about rates, MYGA rates. I'd encourage you to take a look at that. But also, let me send you this book, Multi-Year Guarantee Annuity Owner's Manual. And on the back, that's me 40 pounds ago with a cool Annuity Man Steakhouse shirt. Producer, on the back of that, it says, "Own the steak, not the sizzle." It really does. But I'm going to not only send you the multi-year guarantee book, but I'm going to send you the other 5 annuity owners manuals that I have published on Amazon. But I'm going to send them to you for free if you go to theannuityman.com and sign up there. Please hit the subscribe button as you listen to this music, and I'll see you on the next video.